Liebernight, analyst of the CRM Evangelists, and founder of Ahead CRM, a boutique CRM consultancy and advisory company. Today I want to do a little experiment and use the announcements that Salesforce just did today to provide you with a little analysis and guidance about these two announcements. So let's dive right into it. Today, Salesforce basically did two announcements. One is that effective today, Bret Taylor was announced co-CEO alongside of the venerable existing Mark Benioff, who led the company since basically its inception in 1999. Bret Taylor is an analyst. Well, in analysis is the founder of KIP, which got acquired by Salesforce in 2016, and he most recently was Chief Operating Officer at Salesforce, which means that it is quite a natural progression to become CEO of the same company, except that this same company, the Salesforce, and Mark Benioff is, well, the guy after probably Bob Stutz and Tom Siebel, the one who is mostly associated to the topic of CRM. So it will be interesting to see where Benioff moves next, if at all. The second is that Salesforce did its guidance and financial results for Q3 22, and of course the ongoing numbers for, well, the rest of the year and the next fiscal year. So the revenue is up to 6.86 billion, which is quite a good number. And the fiscal 2 overall revenue is expected to be at around 24 billion, 26.4 billion, sorry for that lapsus. The 24 is coming somewhere later in the comparison. So which makes up a 24% year-over-year growth. Interesting is also the operating margin, which is about 1.8%, which is something that I marked here in order to be noted for the later steps. From a margin point of view, you can see that they are fairly thin, although the revenue went up considerably. Now, how does that disaggregate into the various lines of business? So first thing is that Salesforce added a category, which is data, considering of MuleSoft and Tableau, which was carved out of the platform and other category, which now also has Slack. So you can see that the growth in the platform and other category is by far the biggest, with about where's my mouse? With about 1.3 billion up from 0.8 billion. So now knowing that Slack last reported a revenue of 250 million, one can expect that around half of this growth is Slack. And no pun intended, by the way. And which makes the growth across the categories minus the data category fairly even. Going on to the next ones, how does that distribute by region? And one can see, and I want to put the emphasis on EMEA, that by far the biggest share of growth happens in the EMEA region, which also happens to be the home turf of SAP. So keep this number in mind from a growth perspective and probably also from a revenue point of view. Remaining performance obligation is also another very interesting matrix for a cloud company. We see that over the past 4 quarters, it has been essentially pretty flat, which is not too positive, actually. Not being a financial analyst, I'd say what I would see here is that customers are leaving as fast as they are coming, which might be a wrong interpretation, but as I said, I'm not a financial analyst, and I would be worried seeing this. Now let's put that into a context. Being a German, being a long-time SAP guy, let's see what the SAP numbers have been of the last quarter, which ended September. So it's the nearest numbers that we have. So you see that the cloud revenue of SAP is a bit more than a third of Salesforce's numbers, worth 2.38, nearly 2.4 billion, up 20%. Another number that you should keep in mind. Salesforce had a higher number, with 26% year over year at current currencies. These are current currency numbers as well. So now looking at the cloud revenue as such, SAP is not only a CX vendor, but has quite an important ERP business. You can see that the young S/4HANA ERP system has a cloud revenue growth of 46%. It means a lot of these 20% go into the S/4HANA bucket, which means that the C4 or CX cloud revenue is expected to be smaller than 20%. Going forward, how does that distribute regionally? You see that regionally, SAP also has, the numbers are decent and nothing to be said against it. However, they are smaller than the numbers that Salesforce reports, which again is an interesting thing. Just keep that in mind. Salesforce on a higher base is growing faster than SAP in the same market. Looking into what SAP says for the outlook of 2021, we are seeing that we have a cloud and software revenue of roughly 24 billion. Note, Salesforce reported 26 point something. On the other hand, what we do have is a considerably higher profitability and cash flow, which is not 400 million, but 6 billion, which is quite a different beast than what Salesforce has on offer. So now, second comparison. Microsoft. Microsoft surely is one of the real big guys when it comes to the software as a service business and the business apps business as well. This is out of Microsoft's last quarterly announcement, which covers this slide covers the area of business applications, of Dynamics business applications, which is where we find Dynamics 365, which is their business applications product. Yeah. Unluckily, Microsoft doesn't break down numbers too far in order to, of course, not to be too comparable. But what we do see over here is at least a growth number of the Dynamics product, which is at 31 and 29% year over year, which means on average it's higher than the number of Salesforce, which means that the gap is slightly closing. However, what we can expect is that the underlying number is smaller as well. It's not divulged, so we can expect it probably between 2 and 4 billion, which is still a considerable number, my guess. So what does that mean in a little smaller detail? So Dynamics 365, the Dynamics product line of business grew at roughly 30%. What we do see over here in the marker is Dynamics 365 grew up 48%, which means it's getting about a bit less than twice the growth that Salesforce has, which means Dynamics 365 is picking up. Now, what does that all mean? Let's do it give a little summary. So what Salesforce delivered is solid, but not necessarily stellar numbers. They are well on their way to become the world's largest business applications vendor. Their expectations at fiscal year 22 are larger than the ones that SAP expect for their fiscal year 21. So these fiscal years end roughly at the same time. They're mostly overlapping, but are roughly ending at the same time. So we are looking at about 2.4 billion more revenue that Salesforce has than SAP has in the business applications business. So now what we see as well is that Salesforce reports a very strong platform growth. However, this is mainly driven by the Slack acquisition. So about half of this growth is Slack. We can assume that it is about 250, maybe 300 million that go into that account. So if we now take out this acquisition out of the growth rate, then we are probably around 21, 22%. This means that overall, the growth rates of SAP and Salesforce are pretty similar, actually. Still, for Salesforce, this is mainly CX market. For SAP, it's not. It means in the CX market, it's growing faster, slower than Microsoft. And still, in SAP's home turf, the growth rate of SAP outpaces the growth rate of SAP, which is probably a bit worrisome for the SAP sales force. Now, the good news for the other companies is, or the bad news if it's working, the operating margins and the cash flow are actually razor thin. So they are basically relying on their growth of shares in order to be able to acquire additional revenues. So the organic growth rate is not that stellar anymore. Still great. But in essence, the company buys growth and revenue on cost of profit. That's it so far, with a lots of hic and hack and not so well pronounced words. If you have questions, contact me. I'm always happy to give an opinionated answer. And else, have a good evening and see you later.